So 2 weeks ago, I read an online article about the Reserve Bank of New Zealand removing the LVR restrictions in the next 12 months for residential lending. So what does this mean for first home buyers? Roll intro. What is up friends, my name is Gifford and welcome to my channel and my garage. First off, I'm no expert. I just want to discuss my personal opinions and experiences about personal finance, property investing, and my journey in the stock market at the beginning of this year. If you want to follow my story, I will leave a link in the description to my introduction video. Go easy on me, it was my first video, so I didn't really know what I was doing, but it explains everything that I'm trying to do here. Also, I'd really appreciate it if you could hit that like button. That would give me so much encouragement to keep documenting my journey. Okay, onto the video. Let's see what Google's definition of LVR is. The loan-to-value ratio is a financial term used by lenders to express the ratio of a loan to the value of an asset purchased. The term is commonly used by banks and building societies to represent the ratio of the first mortgage line as a percentage of the total appraised value of the property. So in simple terms, the LVR is the percentage of the remaining loan amount after you paid your deposit. So when I was a first home buyer, the property that we were trying to buy had to have an 80% or less LVR in order for the banks to give us lending, meaning we needed a 20% deposit in order to buy the house. As an example, if you were to buy a house in Christchurch, New Zealand worth $400,000, you would need a 20% deposit of $80,000 and the bank would lend you 80% of that, which is $320,000. So with removing the LVR restrictions, what does that mean for first home buyers? Can they now buy a house without the 20% deposit of $80,000 for the $400,000 house? Well, not exactly. So there are two parts to getting a home loan. One is a suitable deposit and two is the weekly repayment. So the reason why you want a good deposit is to lower the weekly repayments and to make it affordable. So let's take our $400,000 house as an example. Previously you would need 20%. So let me get the calculator and we'll put that in here. So our loan amount with our 20% deposit of $80,000 would be $320,000. We'll choose the interest rate to make it easy as 3% over a term of 30 years. That would mean the repayments weekly would be $311. So grabbing the calculator again without a 20% deposit would mean that our loan would be $400,000 at 3% over 30 years has now jumped up to $389 with the LVR restrictions removed. But before we get too excited about the LVR being removed and having 0% deposit, the banks are unlikely to lend 100% of the home loan. Now for first home buyers, this is good news. It means they're more likely to get a home loan with less than 20% deposit. So the takeaway from this is, even though the LVR has been removed, the 4 major banks will still require a minimum required deposit. So in my experience, as well as the deposit, the ability to service the loan is also important. Ultimately, you will only still be able to get a loan if you can service the mortgage. So as a general guideline, the weekly mortgage repayment should only be 30 to 35% of the total household income. So I can't comment on the current market, but if you have over 10% and you're a first home buyer and you can service the mortgage, now is a great time to buy with the LVR restrictions being removed. Well, that's enough for me today. If you enjoyed the video, feel free to subscribe. Otherwise, I'll see you on the next one. Goodbye.